Hey guys, today I want to show you how you could have turned just $100 into 4,600. That's a 4,600% return, or in other words, a 46x gain on your initial investment. I know a lot of you have opened up this video. You're thinking, yeah, this guy's BSing me. Let me go ahead and click off the video. I'm not. And if you actually stick around, I'm going to show you and prove to you with real data exactly how you could have done this. I'm going to show you exactly when you could have entered and exited this trade to produce these profits. But guys, it's not even about it being a 4,600% return or a 300% return or a 600% return. It's not about the profits. It's not about the gains. It's about the lessons and key takeaways we can get from this incredible trade we took here in our WhatsApp group. I'll be walking you through the live messages I was sending through the trade, the thoughts, the emotions that were going behind this trade. And so that being said, not only are we going to dive in this trade and give you so much valuable insight when it came to taking this trade, I'm also going to show you all the wins and losses from this week, whether we got them right, whether we lost money, made money. And then third, guys, I'm going to show you some of the game planning that went behind taking this incredible trade right here. So guys, this video is going to be packed with information for you guys. I hope you enjoy it. If you do, don't forget to drop a like. Without further ado, let's go ahead and get started. So it all begins on what felt like just an ordinary Friday morning. I wake up, brush my teeth, and take a shower, and then I get my phone out and text these messages to our group. Top trade for the day, STMP puts, and number 2 trade for the day, Expedia puts. Okay, now here is the definitive, game plan I gave out here was EXP doesn't have to bounce, but if it does bounce, do not pass up on this trade. It is too high probability to not take it. You can see I'm pretty excited, okay, because I knew this was going to be some good trades we had planned for today. I texted him, look, video's going to be fully uploaded in the next 10 minutes on the site. Let's go. Okay, and so we're excited about this trade, but we don't actually take full advantage of this trade. So this is not a video to brag about the 4,600% return. As a matter of fact, it's an attempt to make fun of myself for only making actually an 80% loss and then a 300% gain on this trade. Okay, so we're gonna walk you through all the emotions and everything that went through this trade. So let's actually go ahead and get started. How is this possible? We're going to bring up the option chain right here, and we're going to plug in the options data into this chart right here, which is the 175p. Now, how do you do this? You want to actually go and double click on the strike you're looking at. You're going to double click and you're going to go copy. And whenever you copy that, you can actually go ahead and paste it right here. Boom. Okay, and this is going to give you a chart of the pricing of your options on this day, so we can actually see pre-market these we're going for 13 bucks. Now that's because of implied volatility, before the earnings date, right? But after the earnings release, how much are they going for? Look at the IV crush here. You see the contracts go from $13 down to $3. So you definitely didn't want to be holding these contracts over the earnings announcement. Now you can see they reported earnings right here, gapped up hugely, bounced and dropped. And remember, this is exactly what I said in the group. It doesn't have to bounce, but if it does bounce higher at the open, do not pass up on that trade, right? Because once again, the probability of winning on this trade setup that we came up with was too high, okay? And so I made it very obvious that this was our top trade if it bounced, okay? So that being said, with this option chain pulled up, or the options pricing right here, you can see that it opens up these 175 strike puts, right? We're looking at the 175s. We're going for $3.20. So let's say you tried to short Expedia at the open. You actually lost money, okay? Because you were buying these contracts for $2.50, $3, and shortly after they were pretty much pennies at really 10 cents, okay? Just literally an hour later, okay? So here's an important message I sent to prevent people from getting in this early. I said, EXPE contracts are very overpriced considering our DTR. Let IV crush a little more. So I sent this message out at 8:32 a.m., which is really 9:32, so 2 minutes after the market opened, considering I'm on Central Time. Okay, and so that being said, I'm sending out this message here, looking good, triple top, EXPE, and sell zone as a signal that this is looking good to start getting in, okay? Now, this message was sent at 10:10 a.m. Okay, so 10:10 a.m. was right about here. right about here. So you can see this is when we start to enter. So we're entering, but guess what? That's too early. This is still too early. And so we're actually losing money on the trade as it bounces higher. Okay? And so this is really important because it just goes to show you that you could be right on the trade, right? You can see we're right on the trade. Expedia puts, and ultimately, right, it does make you 5,000% right there. Okay, but it goes to show you that if you're early to the trade, be ready and be prepared to actually be in the red on the trade. But this is where trusting a process comes in to help you. Okay, but that being said, you cannot overexpose yourself to too much risk. So what we end up doing is we have two strike prices. Actually, at the time that I send this message, I have one strike only. I have the 175 strike put, okay, because I'm expecting a 6-point move lower. Now, when I'm at the 175 strike put and it bounces, look at this. Expedia is now at 179, meaning we're $5 out of the money. Okay, so the pricing of these options goes to completely nothing at the peak here, right? You can see at 1040, what were these contracts going for? They're going for 2 cents, 3 cents, 10 cents, okay? So these contracts, these 175 strike puts, were pretty much worthless on this major bounce here. So that's how much a difference. You see this is a 30-minute difference. A 30-minute difference can really be the difference between you losing 80% to making a ridiculous percent, right? So let's actually show you this, right? Remember the message I'm sending here at, it was what, 10:15. If we're really, it's 9:15, triple top, EXPE sell zone. So 10:10 a.m. Basically, if we look at the pricing of these options, they're going for 96 cents. Okay, so from 96 cents down to literally shortly after, 30 minutes after, right, they're going for 19 cents. So it's pretty much an 80% loss. We're losing 80%. You can see here, I sent out a message, minus 75% on EXPE right now, right? So we're saying, look, triple top EXP and sell zone, which is right here. We're looking good. We're starting to enter. Shortly after, 27 minutes after, boom, it starts bouncing. We're down 75% already. Right, so this just goes to show you how one guy can make a lot and another guy can lose a lot on the exact same trade, even if it's a great trade, right? Because once again, look at this. This is our first trade on the 175p here. We're getting it for 90 cents, and they're going for 19 cents shortly after. But if you've been following the channel, if you're in our group, you know that our motto is never sell on the bounces, always sell on the drops, guys. So I am never going to sell it, even if it's skyrocketing and even if I'm losing money. Okay, so just by following this simple tip, you're able to reduce your loss from like 90% loss to about a 70-60% loss. Okay, so that makes a huge difference. It's the little things like that that really add up over time. Okay, so if you can correct these little mistakes, it's going to make a big difference in the long run. Okay, so boom, we save ourselves a little bit there on the loss, but still, 60-70% loss is not pretty. But what's next, right? Going into what are we going to do next, right? So the next thing we do is send out this message here, okay? Depending on your position size, this is a fantastic time to be adding to this trade. And so look at this, guys. You can see the message is sent at 9:39 a.m. Once again, I'm on Central Time, so that's really 10:39. 10:39 is the literal peak right here on Expedia, okay? So how am I able to make this call to say that this is a fantastic time to be adding this trade, even though we just took a 60%, 70%, 80% loss, depending on everyone's entry and exit around this time, you get different feels, right? So everyone's, just took a 60, 70% loss. And here I am saying, guys, this is a fantastic time to be adding this trade. But remember, right here, I'm saying 175s are out of the question. Throw them away on the drop, okay? So basically what we're doing is this is a strategy shift. We're changing the strike price because we have to understand the magnitude is more probable to get past 177.5 than it is to get past 175. Does that make sense? So you want to change your strike price and get rid of your 175 strike puts and actually buy 177.5 strike puts. And so you see I send out this message here. 177.5s on the other hand have 5x plus potential. A drop to 175 will be a 700% plus return. And well, that's exactly what happens here. Okay, and so this is the pivotal moment is, okay, we got to cut ties with the 175 strike puts because the probabilities are just too low. It's most likely not going to be worth the risk at this point unless you're positioned in a way where you don't mind losing 100% on those 175 strike puts, but the chances are you probably over position, right? And so that's the whole point here. If you're over position and you're at your max loss limit, you should not be adding, right? You don't want to average in, average in, average in, average in. Okay, you can blow up your account if you go put your whole account in. You have to stay within your plan. You cannot exceed your max loss potential or your limit that you are comfortable before the day. And so I always say this on Friday, you don't need a lot of money to make a lot of money. And that's the power in Fridays, right? This is why we love Fridays, because once again, you could literally take $100 into $4,600, $1,000 into $50,000. So that the key on Fridays is not necessarily to go swinging, putting 10,000, 50,000 into a trade. Okay, it's time to chill out, but take advantage of these setups here that produce these incredible returns, right? So, actually, I should take that back. There's nothing wrong with putting $10,000 into a trade on a Friday. I'm just saying, as long as that's comfortable for you within your risk parameters. Does that make sense? So that being said, we make the transition into 177.5s. We buy them right here at 9:39 when I send that message at the peak. This is a fantastic time to add. But remember, we're still holding the 175s, and that's when we sell them on this drop, right? Because we say right here, throw them away on any drop, because we don't want to hold the 175s even if things are dropping, because the magnitude, right? We might not get all the way down to 172, right? So even if you get down to, literally, if you drop all the way down to 175 by the end of the day, these 175 strike puts are going to be worth $0 if you only drop to 175. But if you drop to 175 and you have the 177.5 strikes, then they have to be worth $2.50 minimum. Does that make sense? So hopefully that's not confusing. I feel like if you're a newer trader, that might be a little confusing for you. We have, if you want a video going over these options pricing, intrinsic value, just let me know. I'll be happy to do that. But that is the transition, and that is the pivotal moment that saves us from taking a 60 to a 70% loss on this trade to coming out on top. So now looking back on this, how could you have really and truly put together this 5,000% return? We can easily see how you could have done this on the 175 strike put if you would have waited, okay, until the low of day, which was 105, was when these contracts were the absolute cheapest, okay? From 105, and the highest that they were was 1550, which is 350, right? So let's just draw a line so this makes sense for you, okay? They were at a low of 6 cents at 105 p.m., and they were going for the highest at 1550. So 105 p.m. to 3:50 p.m. was when this trade was most profitable. So let's actually go here and draw exactly when you wanted to enter and exit this trade to produce these returns. So we want to go to 105 right here. Okay, boom. And then we're going to go to 1550, which is 3:50 in the afternoon, right there. Okay, this would have been your most profitable way to trade Expedia. Now, you're thinking right now, okay, how is buying your puts right here more profitable than buying puts right here? The reason is because, guys, theta, time decay, can seriously eat away at your options. The closer you get to expiration, the more theta is going to kick your butt. Okay, so this just shows you sometimes the best entry is not at the peak on a Friday. Sometimes the best entry is when you're going to get the biggest magnitude per time ratio. Does this make sense? So if you entered here, you're getting a 8-point move, okay, within 6 hours. If you enter here, you're getting a 6-point move within 2 hours, right? So let's do the ratio here. Would you rather get a 6-point move in 2 hours or an 8-point move in 6 hours? The ratio is way better here, right? Once again, getting back to that ratio, this is a 6 to 2 hours, right? 6-point move to 2 hours is a 3-to-1 magnitude to time ratio, and an 8-point move over 6 hours is like a 4/3 ratio. Does that make sense? So the ratio, the magnitude to time ratio, is much better entering here than it is here. And once again, that's really hard to do. It's really hard to nail it. It's really hard to know that this is your perfect entry here. But nonetheless, this was what you're possible. This is the possibility, and this is what you're capable of doing on this trade we put out here in the WhatsApp group. So phenomenal trade, despite us having an early entry and an early loss. We get into those 177.5s, and I'm going to show you the contracts right here. You can see at the end of the day, these were going from a bid of 350 to 575. Now, if we copy and paste the 177.5 strike puts, look at this, guys. We were getting these for 30 cents at the bottom, because remember, the bottom here is the peak. And I sent this message out right here at 9:39, which was the peak, right? When I said, okay, we need to start adding, but instead we need to add to the 177.5 strike put. So we're getting these for, you can see it says a low of 27 cents. I was actually getting these for 30 cents. But that being said, these 30-cent contracts ended up going for $4.35 by the end of the day. Now, granted, we didn't actually hold it all the way until the perfect exit. You're collecting profits, guys. You got to know how to take chips off the table. So you're going from 0.3, you're collecting profits there, you're collecting profits there, you're collecting profits there. So all in all, guys, after taking a 60% loss on the first position and collecting profits on each stop on the way down, we end up coming out with just about 2.5x our money in total on this trade. So this is what's funny, guys. This was right here, if you bought the 177.5 strike puts, you're buying them for 30 cents and you're flipping them for $4.35. This is a 1,500% return as the best case scenario on these contracts. Now, it's awesome. Why? Because we actually had the perfect entry, guys. Remember, we were getting these for 30 cents and the low was 27 cents. So we actually had the perfect entry on these contracts here, but we did not have the perfect exit. Why? Because once again, you got to scale out and collect profits because you'll never know when something could reverse on you, and you're not going to nail every single trade. So you got to be able to take chips off the table and reduce your risk and also collect some profits, right? So granted, we had the perfect entry. This could have easily been a 1,500% if we weren't scaling out. But as you know, any good trader, you should be scaling out to lock in some gains. But that being said, this was a 1,500% return we could have had here. And so despite having a big loss here, we're able to come out on top by collecting profits on the way down, by changing our strategy, by reducing our risk, but still taking a phenomenal trade here. So guys, that was the EXPE trade. I hope you like this, this walkthrough and breakdown of this trade. It was fantastic. And guys, another thing I should point out here is, you can't put together these returns unless you're aware of these trades. A real and honest question I have for you is, how many of you were actually aware that this was a true trade you could have taken yesterday? That this trade could have made you 1,500% or 5,000% if you had the 175 strike puts, right? How many of you actually paid attention and knew this trade was even possible, right? I guarantee 99% of guys watching this video weren't even know, they didn't even know this trade was taking place yesterday. So we put together this table here, and this was in bold purple underline as one of our top trading ideas for Thursday that we were looking at. So if you want, I can send this to your email every single week. As a matter of fact, I'm actually about to work on week 4 earnings table here. It's Saturday morning at the time of recording this video. So don't miss this earnings table. I'll put it together and I'll have all the earnings for next week for you, so you don't miss on trades like this. But guys, that was a phenomenal trade. But as promised, this wasn't the only thing I would go over in this video. I promised you I'd show you all the wins and losses from this week. So let's actually go down here and let's take a look at some of the other trades we took. So this was our week right here. You see this message? This is where I recap all the trades we took for the week. So let's actually go ahead and go to a single chart to just look at all these trades. I'm going to go ahead and remove all the indicators so we can get a better view of this chart here, guys. Studies. Remove all studies, and we're actually going to take a look at all these trades we took here. Okay, so PayPal puts, I'm sure you guys have seen our video on the PayPal puts we took. This was a phenomenal 300% return, shorting it right here, collecting profits there. Remember, if you're new to the channel, you can go back and watch the video. I'll put like an image of what the thumbnail looks like right here, and you can check out that video. But that was a phenomenal trade this week we had on PayPal earnings. Then we had Zillow puts, which is another trade I posted on the channel for everyone. Okay, completely free. Here's the thumbnail. We nailed that trade. Anybody could have taken that one, and I'm really happy for some of you guys who are actually taking advantage for completely free on this channel, who made money on this trade. Congratulations to you. Next trade we took, Expedia puts, which is the one I just showed you, which was absolutely awesome. A trade there. That was another phenomenal trade. So PayPal puts was 300%. Zillow puts, I wasn't able to actually trade it, guys. I had a doctor appointment and some other things I had to handle, but knowing from you guys, it was over 300% return on Zillow puts, so that's phenomenal. Expedia puts, I was able to trade. We all know how much return this was. That was a ridiculous trade. And then STMP puts, okay, wow. This was a really good trade, but it did not pay. It's so weird. This is, actually, I'm about to explain this trade in detail in just a second, guys. We'll go over that in just a sec, because this is actually kind of an explanation you really got to get into to understand how you can lose money on a trade that you're right on here once again. Next trade we took, W puts. I'm sure you guys remember this trade. right here. Shorted the bounce after earnings. It drops. Made about 250% there. Nothing too crazy, but pretty solid. We had Twilio puts, guys. I actually did an in-depth breakdown of this trade this week, how we used the DTR to nail the drop here. So it had a 17-point DTR. We short it, it drops. Beautiful trade there. And SPY puts, I obviously talked about this trade the other day right here. We shorted the SPY, it drops, collect profits as it breaks through that trend right there. So, I mean, overall, a very solid week. It wasn't perfect, guys. We went 1, 2, 3, 4, 5, 6 out of 8 trades here. So only about a 75% accuracy. Nothing crazy, nothing too amazing, but still a phenomenal week. Why? Because look, 300% return, 300% return. You know, this is literally 300% plus return. Really, this could have been 1,500, could have been 5,000% return. You got a 250% return here. You've got a 250 to 300% return here, and you've got a 60% return here. These were all the trades I took this week. Okay, and then the mRNA puts, which is the trade I got wrong. Okay, we lost money. I lost money on this trade. Why? I was trying to short mRNA and it recovered that gap there. So ended up taking about a 50% loss here. Basically, I know earlier in the video I said never sell on the bounce, but there is times to sell on the bounce very occasionally, and it's if you break a key level and if you have a ton of upside, right? So for example, Expedia, you wouldn't cut the loss on the bounce. Why? Because there's very limited upside on this bounce, right? There's no upside potential here. We're in the sell zone. It's the highest probability of dropping, but mRNA, when it breaks this pre-market level, I know that, okay, this could be a huge reversal coming up, so I just go ahead and cut that loss right there. Especially, why? Because during this mRNA trade, we had PayPal going, which was making 300% at the time, and then we also had this trade right here going, forget exactly, it was Twilio. So we had Twilio and PayPal going absolutely ham, so why would I hold the one loss there? So I just went ahead and cut it, okay? So those were the trades for this week. These were the trades for last week. Last week was even better, actually. We had Amazon puts, Google puts, Facebook puts, ES puts. I mean, actually, I can probably break down all these trades right now, but this video is getting a little long. I mean, I'd love to break it down, but I think it's still too late and not really relevant at this point, considering that was last week and no one cares about last week, right? So this was this week, and finally, I told you guys I was going to break down the STMP trade, which is another trade I lost on this week. Right here, this was our second loss of the week, STMP puts. Okay, so this was a phenomenal game plan, guys. This is a beautiful plan. Basically, this is golden information what I'm about to share with you. If you made it to the end of this video, or like we're almost closer to the end, but if you've made it this far, guys, this is a ridiculous, incredible behavioral trait you should know about STMP. Any time in the last 4 years that this stock has gapped down, it has never recovered the gap down. So remember, like mRNA recovered its gap down, right? So that's a recovery. But STMP has never recovered a major gap down after earnings in the last 4 years. So we took advantage of this. You can actually see here's the closing price of STMP. And so what I actually do is once we get there, once again, we abuse the facts. The fact is it has never recovered a gap up or a gap down, right? So when it tries to go higher and recover the gap, it's exactly how we know to short it at this level right here. And that is not a resistance level, right? That is not anything that anyone would really think of because people aren't looking into the facts. They're trading based off their emotions, and we trade based off the facts, guys. So this was a loss even though we absolutely freaking nailed it. Why is that, guys? Because the options were very strangely priced. STMP had an extremely high implied volatility. You can't see it now. The option chain disappeared for the last Friday's expiration, but the implied volatility on these contracts were over 100%. Whereas if we look at Expedia, you can see the implied volatility here on these contracts is only about 30% or less. Now, I guess since the trading day and session is over, we can't actually see the implied volatility data here. Okay, but the implied volatility was too high. So even though it dropped, that implied premium was just too high in relation to this drop. Now, if we would have dropped further, if we would have dropped to 174, we would have made a lot of money on this trade. But because it only dropped 8 points and we had to pay a premium for those contracts, it wasn't enough to squeeze out a profit on this trade, at least for myself. Now, a couple members told me that they actually made a little bit of money, so that's fine. But I lost just a little bit of money. Now, guys, I'm not sure if you remember at the beginning of this video, I said I would do 3 things. One, I would break down the Expedia trade and show you how you could have literally turned $100 $500 into 5,000, make that 5,000 4,600% return. Second, I told you I'd show you all the wins and losses from this week, each trade we took. And third, I told you I would show you some of the game planning that goes behind taking a trade like this. For example, what is this zone we have drawn up? How would we even know to draw the zone up? I mean, where does this come from? How do you know to short the bounce in Expedia, right? So some of the planning I can show you, and I can't show you everything. I mean, guys, it would take me like 6, 10, 15 hours to try and show you everything, the process and everything that goes behind, knowing how to take these trades and everything. I mean, it's not something I can do in 30 minutes, but I'm trying to show you as much as I can with the little bit of time we have here. So first thing when it came to playing this trade is we had to have some kind of resistance, right? And everyone knows what resistance is, but it's really not that simple because, trading is a lot harder than just support and resistance, right? There's emotions, there's position size, and there's all these other things that go into it. Okay, but what you want to look at right here is the first message I sent for the day was right here. It was literally a picture of our zone for the trade. Now, you can see here, this was the pre-market picture, right? We have that zone, and let's look at the after. What actually happens? Boom, perfect zone, and we reject double top in there, and that's how you nail that trade. So the next question you're probably wondering is, how do you know to short it, Alex? I mean, cool, you nailed the zone, but how did you know you wanted to short it instead of buying calls on a trade like this? Now, guys, this is where it takes a lot of time, effort, work to create these trade ideas and make sure they're high probability. Guys, we don't take trades unless they've got at least an 80% plus chance of winning. And so obviously you guys can see that works. I mean, it reflects in our accuracy and our trades, not just this week, right? It's not like we had a 1 lucky week or 2 lucky weeks. I mean, this is the only 2 messages I have right here over these trades. But guys, I mean, I've had perfect weeks, flawless weeks. As a matter of fact, here, I say once again, we're due for a perfect week soon. It's been a while since we had a flawless week. A flawless week is where you get every single trade of the week correct. And it's been a couple months since we've had that. So that's what I'm looking forward to, guys, because I know that you can only go so many weeks without having a flawless week. And I know it's coming soon. I know this week is coming. So it's only a matter of time. And once again, the probabilities are rising each week. But getting back to how do we know to short this stock instead of going long of it? You can see I put the video right here in our trading club, and so you can actually watch the game plan and where I break down the trade and exactly why we do that. Mostly we're looking at the historical reaction and understanding the behavior, right? The behavior. And so just how I knew that STMP has never recovered a gap down, well, we're studying the behaviors. So when you can understand the behaviors, understand when a stock likes to do what, right? Because behavior doesn't change. We all freak out when we're losing money, right? If it's the money we're uncomfortable losing. The same thing with institutions, guys. So they react and they behave the same. So it's not just about chart patterns, guys. It's also about behavior. And I know I just said that like 28 times. Behavior, behavior, behavior. But it really is. It's about behavioral characteristics. Goddamn, I just said it 29 times. But guys, that's some of the things I can share with you in this video, guys. I hope this really helped you. I hope you learned a bunch of golden information. And really, I commend you and applaud you if you made it this far in the video, because that really shows how serious you are. And, I'm looking forward to our success together. So, guys, thank you so much for watching. My name is Alex. Remember, I'm going to get this earnings table to you tomorrow. I'm actually going to send this to everyone's email. It's completely free, guys. I'll have a link in the description for you. So I send out the email on Saturdays, and then I actually make a video over the earnings on Sunday. So guys, stay tuned. We got a lot of great things coming up, guys. Thanks so much for watching. If you made it all the way to the end, guys. That being said, if you made it to the end, don't forget to drop a like. Make sure you're subscribed. Make sure you have your notification bell on. And that being said, we'll see you tomorrow on Sunday when we go over these earnings trades. Bye, guys.